Good morning. Welcome back to Forex Focus here on Tasty Live. I'm Glenn, joined by my good friend, Mr. Mike Henley. As our good friend Beth always says, Thursday night on a college campus, nothing like it. What do you got? What do you got planned this weekend, Mike?
Probably looking at everything that's happened this week. This was a massive week for data.
Oh, come on.
Massive week for earnings and in general.
Are you at least doing that in the sun? It's supposed to be 75 and sunny.
Yeah, we'll get out on the golf course hopefully. I mean, we got 2 months left of summer. Maybe we'll see how September is.
What about Lollapalooza? Kicks off today.
No,
Not
I'm
going?
far too old. Kind of a geezer now, too old for Lollapalooza. Are you going?
No, but that's just because, no one I'm particularly a fan of. And the Sabrina Carpenter tickets were too expensive.
Oh, yeah.
So not this year. Not even any after shows. Usually I like going to a couple of the after shows are better and better priced than going into Grant Park with all that mayhem. But we'll see. Probably not. But yeah, before that, we have an action-packed week here across asset classes in the Forex space in particular. Yesterday, Fed announcement. What were your thoughts on that?
That was as expected, nothing really new.
Purple tie Powell.
Another one of those, we're waiting for the data. Keeping Fed funds as is, not really too much craziness, and on half of the press conferences asking him his opinion on what he thinks of all the attacks from Trump. And then this morning I log in, first thing I see on the Twitter feed on our platform is him calling him too late Powell again, and then saying
Classic.
that he's too political to be the Fed chair, even though a Fed chair has never been attacked by in this manner. Even when you go back to the tension between Reagan and Volcker, it was never like that, and that was always behind closed doors. They
didn't
still,
have Twitter.
Were indoor. That's true. Maybe that's the difference.
They had Twitter.
in all
Reagan would have
this.
been. They had Truth Social. Reagan would have been all over him.
I mean, it's interesting to see. As us in our 20s, right? This is all we've known. So since 2016, we were 15, 16 years old, right, with Trump in his first term. Then we got the 4 years of the craziness with Biden on these next 4 years. I don't know, does it ever calm down a little bit in 2030, 2028, or does it just keep escalating from here?
Do you want it to calm down?
I mean, as a trader, it's a great thing, right? But maybe at a certain point, you're like, hang on, guys, let's try to be friends, or at least try to communicate in a little bit more of a productive manner that moves the economy and everything forward.
We had two dissenters.
Trader, yeah.
Are they trying to be the next Fed chairs?
Well, Waller is shooting a shot every day. Every time he hops on the mic, wants to cut. And then he just keeps descending over and over. So, I mean, yeah, there's that political aspect right now. But a lot of the other governors are standing behind Powell. And there was only two, right? I don't think there was too many.
No, just two. And I think they were pretty expected. But here, if we want to jump into this CME FedWatch tool, this is what we're looking at when we are looking closely at rate decisions. Now, no cut for the July meeting, now looking to September, so nothing in August. We have about more than a month and a half until this September meeting. And if you look at the probabilities here from futures traders, what they're expecting, difference from 1 day yesterday, big difference from 1 week yesterday, where we were only looking at a 40% chance of no cut in September. Now traders are pricing that in as the likely outcome at 60%. Does this surprise you given the kind of muted rhetoric, or is this, we saw a 5% pop. I was looking at this with Mike and Nick later yesterday morning. Saw about a 5% pop in this probability off of the GDP number alone. So not a ton of movement from the meeting, just reiterating that stance. We have PC inflation this morning, non-farm payrolls tomorrow morning. Do you see either of those events changing the narrative here for the rate picture looking to September?
I don't know if it changes the narrative, but I think maybe it reinforces it depending on what it comes in. I mean, the economy, we're sitting at full employment. Inflation's all right for the most part. I mean, it's still above target, and that's probably the main reason why they're not cutting, right? Because when you're sitting at the Fed has mandates, right? They don't care about all this political stuff going on. They care about
I don't know. Too
employment.
political Powell might be caring.
They manage the money supply, and it just to me is the economy is running hot right now, and then you want to cut rates on top of it. I mean, as a trader, if that ever happens, right, the opportunities are going to be absolutely be there in the market. For us in our 20s, trying to buy a house or anything in general, I don't know how that will affect it. It's my background in real estate, right? Like the first thing you learn, and there's so much historical data to back it up, is when you lower rates, then the price of a house goes up, right? Especially they keep saying there's all this suppressed demand. Won't that just shoot up the prices of housing even more? Where it's like you can look at new construction right now, and it's arguably almost a better deal in certain spots in the country to just build your own house rather than buying your neighbor's, which is just crazy that we've gotten to that point. So, I mean, when you look at the housing side of things, it's pretty terrible and bleak right now. Stocks don't care about it, I guess,
Not at the moment.
which is interesting because historically that has mattered, right? Will it ever matter at a certain point? Who knows? But yeah, that's really the only area I see weakness is like housing and construction jobs for the most part, and then like the trucking you see. I want to say around like 20% or so of trucking is transportation of housing materials. So when people look at this trucking data and they're like, oh my God, it's cratering, that's not the biggest thing because we see that in the housing. So proportionally, probably the dudes that move the materials around the country, right? They're going to be bad as well, is how I look at that. But certain the other parts of our economy don't care, and they're running hot,
So no rate cuts for now, keeping the target rate well above 4% at 4.25 to 4.5. But let's get into a couple slides real fast before hopping into the platform and getting to the day's price action. But just wanted to check in this morning on daily FX movement expectations. We monitor the Forex space daily. Look at these prices a lot, you and me, Mike, but for people that aren't looking at it a ton, I think the couple of numbers we've put together today can kind of contextualize, give some good expectations for checking in perhaps periodically to FX markets and what to expect over a daily time horizon in terms of price movement. First, just want to cover real fast what volatility is in Forex trading. A very, generic answer here with just explaining that volatility is the variance of prices. Here we're going to look at daily ranges, but can be over any time frame. And all high volatility means is that you have the opportunity or a baked-in expectation of wider distribution of prices. So that can mean more opportunities for trade entry, more prices for trade exit, larger ranges if you're scalping intraday or over whatever time horizon. And here in the summer months, we tend to see volatility dip. But in this action-packed week we have here, with all of the economic events on the calendar, we've been seeing a slightly more volatile than expected for perhaps the last week of July. And we're going to be looking at standard deviation. So we pulled up a little bell curve here. We calculated the daily standard deviation of daily price changes. And so what that'll tell you is it gives you a pip target, a number of pips of what to expect roughly 68% of the time, the range that these pair by pairs movement can be expected on a rolling basis. So This can tell you when you see a move greater than this. That's not the most ridiculous thing because it happens not 68% of the time, but the other, 22, 32, 32% of the time. And so that can give you just a little more context for, is this one of those 32% times where we see a range that is wider than what we'd expect, or is this an opportunity for a contrarian play? You see a move wider than that intraday. Is this an opportunity to speculate on this will be one of those 68% occurrences, and this will come in a chance to play the contrarian play? So depending on your opinion, opportunity both ways, but important context to know where we're coming from. So here I've put together a little heat map of popular US dollar pairs, the daily price changes, one standard deviation moves in pips. We're looking at euro dollar, pound dollar, dollar yen, dollar Canadian dollar, Aussie, Swiss franc, and New Zealand dollar. I put together 3 time horizons here. So looking at 1 month, 3 month, and 6 months. The trade-off here being the less time you put in, the less observations. So the less robust this statistic is possibly, but also the more sensitive it is to the current environment. So maybe you're thinking 1 month, we are still in a summer month, maybe that plays into volatility, or you look more to the 6 months where you're saying, okay, we need more data in here, looking over a 6-month time horizon. This is what I can expect. And 3 months, perhaps a little Goldilocks action there, right there in the middle, not too sensitive, not too outdated. What are your thoughts here looking at this heat map, Mike?
USD JPY, that's not a really unsurprising thing just from watching the price all the time with how much news that has happened. The carry trade unwind last year in August, just seeing the massive volatility in USD JPY every day. So that's not surprising. Kiwi surprises me a little bit. NZD USD, very much a tighter range than I expected on that. Aussie is not too surprising there. Euro is the fact that Euro is higher than Aussie is interesting to me. Yeah, as expected, except for those Australasian pairs. I would expect those to be much bigger, especially like more than the quid or the euro.
Yeah, then you have to factor in, the actual exchange rate at the moment on a percentage basis. Perhaps don't have the numbers right in front of me, but 30 pips in an Australian dollar pair, I'd speculate is equal and maybe even greater than 50 pips in pound dollar, because pound dollar trading at 132, $1.32 right now, and that Australian dollar back under 65 cents. On a percentage basis, some of these things start to even out. But you're absolutely right. Dollar yen, the biggest mover, but still across the board, volatility coming in from that 6-month time horizon to the 1 month. 6 month, definitely includes some of that April tariff volatility. 3 months, I think we're out of the woods there with July, June, and May. So no April shakeups in that data. But it's nice to see. We ran these numbers, I want to say last fall, and we got a print of in the 30 handle for the euro. So we've seen this be a lot tighter. And so it's nice to see that there is still, a scalpable range out there, getting some movement in a lot of these pairs. But yeah, it's surprising to me that Swiss franc moving more than the Aussie dollar and New Zealand dollar. Historically, dollar Swiss franc, a less volatile pair than some of those commodity currencies. So, but that one also coming off of historic price extremes. So, and moving a ton with the euro dollar more than I'd say it had in recent years. And then checking in on non-US dollar pairs, pulling up the most popularly traded non-dollar crosses. Anything stick out here? We've got, a big change in that Euro Aussie over the time horizons, but looks like that's leveling out. That 6 month is perhaps a little extreme. Anything else call out to you here?
Aussie was the biggest expectation, I would say, that I see from there. Not too surprising or anything like that, but GBP, JPY, you just look at the price of what that pair is in general. So the amount per pip,
Right.
that's not surprising to me at all there. Would say it's really interesting. I would expect Aussie JPY to be higher than Euro Aussie or something like that, or at least closer to it. But the Euro Aussie is pretty surprising. That's such a big difference there compared to those other ones.
Yeah, I mean, euro pound to me, that kind of validates, highly correlated pairs or highly correlated currencies. Not a lot of volatility there. What is surprising to me is kind of how muted euro yen is. Perhaps if you're looking for a less volatile yen pair to trade, that euro yen is, probably has similar dynamics to dollar yen, and yet lower per pip movement. But yeah, so some interesting numbers just to try and contextualize a little bit. And just wanted to finish up with some key considerations, because when you're looking at just per pip movement, it's easy to say, oh, I want to trade that one because it has the highest pip movement, but a lot of other variables that have to be accounted for when actually trading these pairs, such as the margin requirement, price action, the actual exchange rate into US dollars, because as US traders, all of this will shake out to US dollars. And so a lot of variables there, but a short little example here using the 3-month daily standard deviations. Looking at if you had $5,000 of margin available, you were trading Aussie dollar and dollar yen, two different pairs on the standard deviation spectrum, yen being one of the largest, Aussie being one of the lowest. But when you look at the margin requirement, Australian dollar only commanding 3% of buying power versus that 5% in the yen. That means that your maximum trade size can be almost 2.6 lots of Australian dollar, as opposed to just one lot of dollar yen with $5,000. Your dollar per pip movement is a lot bigger with the Australian dollar pair. And so when you plug in what you can expect in a day, that 28 pips versus that 78 pips, you actually still come out ahead in terms of maximum profit or loss if you were to capture a whole one standard deviation move. And so just a lot of things to consider when you're looking for which market to trade. Anything else there, Mike?
No, that makes sense, right? Because margin requirements based on contract size of the first currency, and Aussie is worth less than $1, right? One Australian dollar is worth less than one US dollar. But the thing is, when you look at USD JPY, right, base currency is USD for that. So that's what it's taking. It's 100,000 US dollars at 5%, right? So you're getting 20x leverage with USD JPY, and then 33.3 repeating X leverage with Aussie there.
Yeah. So there you go. That'll do it for our slides today, covering daily FX movement expectations. So now let's check into the platform and see what we're looking at early this morning, coming off the heels of a Fed announcement right before we get, come on, calendar, right before we get some personal income and core PCE inflation, the Fed's preferred inflation gauge. Fed just spoke. We won't hear from them for a while, but We're getting some good data this morning here in 39 minutes. And overnight we had a Bank of Japan interest rate decision after hours. We had some Australian data points come in. Nothing much to dissect from this Bank of Japan rate decision?
Yeah, nothing too crazy there. I was watching it last night and started to strengthen running up into the rate decision. And then looks like sold off, dollar got stronger once that rate decision actually happened. Nothing really too crazy on that meeting. They just said we're going to maintain rates. We're expecting growth and inflation to tick up, but it's within our models, nothing crazy. So we'll see if the nothing crazy part is actually true, or if it does get crazy, which would be interesting there. Yeah, USD JPY.
Crossing 150 early this morning.
Well, every time we pull it up, 142 or 150 back and forth there every week. But I think what are we back? Yeah, right at the top of the range. Actually broke out of that top of the range and got rejected, retested, and then back to 149. Do we get a break off 150 here, and then we're back to 160? Maybe touch 170 or
170?
Or is it? Nope, we're going back to 142. So it should be interesting there.
Definitely a key psychological inflection point through recent highs. Now back to March price levels. So very interesting that the yen coming out as an underperformer as a result of their interest rate decision. Look no further than when we look at these all FX pairs checking in here, looking at the percent change column to see what's moving the most. What sticks out to me is not this dollar yen, but this euro yen. Big bid here looking at the daily candle. Euro falling off a cliff this week on the heels of, I suppose, the trade announcement, the US-EU trade announcement that spurred such robust euro weakness, not only against the dollar, but here looking at the Japanese yen as well. We're up almost a percent already today, this euro yen bouncing back. So if you're looking to take the US dollar out of the equation, don't want the event risk of some PCE numbers, some non-farm payroll numbers this week, this euro yen giving you a very different range, a very different chart from a price action perspective. Any speculation here? I mean, we've developed a nice range here. Where do you say we close out the week at 171 right now?
It should be interesting, right? Because I want to say, like, in the BOJ schedule, they still plan to hike more. They did pause for now, right? But maybe at a certain point they hike. And then Euro's kind of in that we're pausing for now, wait and see, same bucket as the US. Inflation's nothing crazy compared to like 2021, 2022 levels. In the US, Euro, it's a little bit hot. UK, it's a little bit hot, right? But maybe there is some opportunity in this pair. I know I follow some Europeans, and they were quite upset on that trade deal on Sunday that happened. Thing with all these trade deals is none of them I don't even think are signed. Like this isn't like the word of law yet.
What?
And then I see it come out like the BOJ and the EU have made promises that when you look at their GDP or how much energy they use and the numbers, where do these like massive hundreds of $1 billion of investment come from? Is there even demand for that in the first place? Or is it just all talk for crazy headlines? I like things that are like absolute coming from government officials.
That's a big ask, Michael.
Because that's their job, is to do these things in the first place. And then two, you're really speculating, right? And you're taking a major risk that people chicken out on things or something else happens in the meantime that reverses it, right? But when something becomes law, we've seen bureaucracy, right? It's really hard to overturn all that stuff there. So I think maybe other traders do consider that as well. But That's just how I look at it for the most part. I'd rather, I don't really listen to what people say because people say a lot of things. It's more, let me see what the law is and what they're actually doing in the underlying, not just the words that they speak.
Yeah, I think Chris Vecchio was telling me the other day that whatever energy amount we promised, or the EU promised to take from the U.S. would require all of our energy, and us not to give it to anyone else.
So I mean, it's just unrealistic.
But yeah,
some of these things.
We've got some consolidation here in this euro-dollar market after a busy week. After opening the week above 117.5, now looking under 114.5, a giant 2.5% move lower, but now consolidating here. So if you were looking at our daily ranges, from yesterday's synthetic close price of 142.3, then depending on the direction, you could say on an inside day we have maybe upwards of 50 pips in either direction to go if you're looking to speculate on further U.S. dollar strength or a euro comeback like we've seen against the yen. In that euro-yen pair, you can kind of start to get a little more context around what profit expectations would be for a day. You're looking at still near 115 is in play, and still under 114 is in play. So haven't been here in more than a month in this euro-dollar pair, and now trading through lows of mid-June. And haven't been here since a big move upwards, coming on the way from 112 to 114 here. We'll see where this one settles. Other than that, that's our biggest mover of the day in dollar pairs, but we're seeing some dollar weakness after a pretty strong first half of the week. What do you think? Could this PCE inflation number reverse any of this?
Yeah, maybe, right. If it comes in really hot, then the Fed might want to even stay for longer, higher for longer for rates. But if it comes in super cold, then the question is, does that give them room to cut, which could possibly spark a euro rally against the dollar? Should be interesting to see what happens. I never try to guess any of these numbers. One, because it's them surveying random people sometimes. And then two, I think when they can't get the data as well, then they just use historical averages or estimates just to input it in there. So should be interesting. I really think in this environment, anything can happen at any time because we're seeing things that have never happened before. So opportunity, I think, is there.
There you have it. Dollar moving early this morning. We've got some economic data coming up in about 30 minutes here. But before then, we've got Tom, Tony, and Vanetta up next on Tasty Live. So stay tuned after this break.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.